Software is dead. Okay, guys, that is the narrative that we are seeing in the market at the moment. People are selling out of software stocks left, right, and center in a way that I have never really seen before. And I don't believe it. I don't believe that software is replaceable, and the market sort of is going against that at the moment. AI is going to kill off software based companies. This seats model that has been highly effective in the past 10 or so years and led to very high PEs for lots of companies has led to a lot of downfalls in this quarter. And we're seeing a lot of individual companies go on massive sell-offs, like 50 or so percent. Meanwhile, we're still not really seeing that reflected in the S&P 500. So the market isn't really going down, but individual stocks, especially in the software sector, are down in a correction. And even the likes of Nvidia, the leader in AI, and the CEO, Jensen, just doesn't really believe that these companies will be replaceable. They don't believe that AI is going to be replaceable. They believe that the business models of these software companies, or the majority of them, are going to be more than likely helped by AI. So where am I looking in this sell-off of software? Well, in this software sector ETF we have here, which is IGV, we see a lot of correlation with a lot of individual companies because they have a high weighting in this ETF. And this has been selling off like it has done only a couple times before in history. And each time it's been a very good time to buy. Now, there are a few different stocks in my portfolio which I think are offering good sorts of ranges now, and I've been continuing to buy into them. So I'm going to sort of talk about two today in particular that I think are still very attractive. One isn't even really a massive software stock, if you like, I suppose. It's a software stock, but it's also heavily in AI. But the market's still selling it off because it has a heavy correlation with the likes of this. And it's because it has about an 85% correlation, I believe, and that is the likes of Microsoft. Microsoft is currently down. It's up by about 65% in the past 5 years. But if we're looking at a year to date, it's down 15%. And it's just struggling overall, down 22%, 23% in the past 6 months, after its most recent earnings report, which I think was very good. Going back to how Microsoft is linked to the software sector overall and why it's being sold off with this narrative, despite having heavy AI exposure and capital expenditure surrounding AI, it's because its weighting in this ETF is around 8%. But not only that, its sort of correlation, its line that it follows with IGV is essentially almost about 85%. So when this sector goes down, so does Microsoft, despite Microsoft being one of the main players in AI. More interestingly, other than, say, some of the big ones like Amazon and the likes of Alphabet, they're not taking on a lot of debt to do this. They are doing it in maybe a more controlled way than some of the other big competitors, and the market hasn't really rewarded them for this. Now, however you feel about the capex cycle and whether this is a good opportunity in AI or a bad one, I think that Microsoft is doing it very conservatively and very responsibly. So they're still contributing very heavily to the likes of AI, not as heavy as some other competitors like Amazon and Google, but they're not taking on as much debt to do it. They're not doing it while sacrificing their free cash flow. And I think that's still something that's very good for the likes of shareholders because they're still going to maintain their dividend and their buybacks and that sort of thing, which is unlike some other competitors like Amazon and maybe some others. Now, they're doing this capital expenditure and still growing revenues around 17%, which was an increase, so it is starting to work. Azure grew by about 38% and missed by about 1%, but other segments are still picking up the slack. I still like that, like LinkedIn and other services like that are still growing. And we've still got Microsoft 365 commercial, which is actually the likes of their Copilot and stuff like that, still growing very well year over year. So it's still a diversified and heavily profitable business that I really like my exposure to. So I've been buying into this business even more, despite it going down on what I thought was very good earnings. So without labouring the point massively, I think Microsoft is a really good opportunity here. And it's selling off in a very strange way next to software, despite being both a software and an AI play. So somehow AI is going to kill the software part of Microsoft somehow, but I don't get that. Anyway, Microsoft is trading at a real fair valuation right now, and I think it's still undervalued at this sort of point because I think it's going to produce market beating returns. And if we do like a conservative sort of DCF that I've sort of worked out, 5-year projected 15% operating cash flow growth, which I think is very achievable for Microsoft, given their high capital expenditure into the very highly margin parts of the business. I think they're going to produce more and more operating cash flow in the future. And they're averaged a lot higher than 15%. And then I say that they have a price to operating cash flow ratio in the future of around 20. It gives a fair value of around about $562, which is a CAGR of about 17% over the next 5 years. So I have been buying into this business now. In fact, I bought some just 2 or so days ago, and I think this is a really good opportunity with this business. One of the companies that I've been buying into as well as Microsoft is Topicus. And this is because this software is going to die out kind of mentality in the market is massively killing Topicus' share price. Currently, they're down around about 51% from their highs back in July of 2025. And it's because of this loss maybe in the CEO from Constellation Software in the form of Mark Leonard. There was a multiple that was attached to this and Constellation Software's business that I think it lost that sort of premium. And also, it's because there is a belief that AI is going to massively act as a competitor to the likes of Topicus' business models. If you don't know what Topicus do, they acquire vertical market software-based businesses in Europe, and then they use the cash flow to buy further businesses. But Topicus is unique in the sense that it acquires businesses that are critical to software-based companies. They account for very small percentages overall in terms of fees that Topicus collects. And it means that their products are both critical to the growth of businesses, they're very unlikely to change, and they come with heavy sort of penalties if they were suddenly to switch out of them, because no one's going to be vibe coding to get rid of the software-based companies that Topicus owns. Now, just to show you how AI is actually helping Topicus, I've got an article here that is related to the likes of Topicus' use of AI. So I don't think it's going to be harming Topicus' growth. I think it's going to be helping it. And they've talked about it here. They've basically said that AI now touches everything, their product, processes, and customers. And they're now starting to use it in extensive domain expertise, AI projects that are underway, and they're starting to see real value that comes from the likes of use of AI as a tool. And one of the things they're seeing it use case, if you like, is organic growth. And they believe that it is actually really going to help their organic growth because Topicus still grows organically despite focusing on acquiring businesses that are going to produce the most cash. And I think this is interesting because this is going to help Topicus grow even further in the future, despite this sort of element of the fact that Topicus is going to die out because of the likes of AI. And one of the things that I think is demonstrating this now is this is a very similar business that I also own called whayt. And they recently reported around about 2 days or so ago, and they reported higher levels of organic growth. They were seeing around 8% organic growth, and this is a company that focuses a little bit more on organic growth, but they've grown at 6% for the past year, and they increased this quarter to 8%. Now, that's only a small amount, but when we're talking about millions and millions of dollars, I think this is a big impact that it could have, and it could actually really help Topicus as well as other acquiring software companies. And when we look at Topicus, I think we're going to see them acquiring businesses and still growing very well organically because they're using AI and it's not actually competing with their business model. So I think that the sell-off is actually unjustified, and I think it's trading at a really good valuation now. And to show that a little bit better, I've got DCF here on Topicus, focusing on free cash flow. Now, they have very little stock-based compensation. They do none of it. They don't buy back any shares really either, but they do sort of maintain their share count. I'm saying here that for the next 5 years, they're going to grow their free cash flow around 20%, which is what they've averaged in the past 5 years. And that's not really accounting for any acceleration we may see to organic growth. And I'm saying they're going to trade at a free cash flow multiple of 20 times. And I think this is very attractive. I think it could trade as high as 25 and even 30 times potentially in the future. I think this is traded at 35 times in the past, so I could see it being well above what I've got here as a conservative estimate. But just on those growth rates, I'm getting a fair value for this stock around about $118, 71% on the upside, and a CAGR of about 22% from here. So I've been buying heavily into this business, as well as the likes of Microsoft, and I bought a little bit of Meta the other day as well. So these are the businesses I'm focusing on in this software sell-off. These are businesses that are selling off under this software narrative that is dying out, and yet they're also heavily involved in AI and using AI to their advantage. So I'm liking that the market is giving me an opportunity to buy amazing businesses like Topicus and Microsoft at really good valuations now. But thank you for watching. I do appreciate it, and I'll catch you in the next one.